The history of the United States is often presented as a slow, steady climb toward progress, but if you look closely at the year 1913, that narrative begins to fracture. In a span of just 10 months, the fundamental architecture of American life, how we are taxed, how we are represented, and how our money is created, was completely dismantled and rebuilt. This wasn't a series of unrelated reforms, it was a total reset. For over a century, the American people and their representatives had resisted a federal income tax, fought against central banking, and maintained a Senate accountable to state legislatures. Yet in 1913, every barrier that had held for generations gave way all at once. Before 1913, the federal government was a distant entity for the average citizen. There was no permanent federal income tax. The government funded itself through tariffs and excise taxes on specific goods like tobacco or alcohol. Most Americans lived their entire lives without ever filing a return or interacting with a federal tax collector. The concept of the state reaching directly into the pockets of ordinary workers was considered a violation of the constitutional order. This wasn't just a financial preference, it was a structural limit on the scale of the federal government. Without a direct line to the people's earnings, the government's power was naturally capped by what it could collect at the borders and ports. The monetary world was equally decentralized. While we think of a dollar as a single, uniform thing today, before the reset, the landscape was fragmented and local. National banks existed, but so did state-chartered institutions, each with its own rules, reserve requirements, and often its own currency. In rural towns, merchants accepted local script or state banknotes that might only circulate within a single county. This variety wasn't viewed as chaos, it was the texture of commerce. It was a system built on local trust and local relationships rather than a central mandate. People used money issued by institutions they actually knew. But the most significant check on federal power was the Senate. Since the founding of the Republic, senators were not elected by popular vote, they were appointed by state legislatures. This meant the Senate functioned as a literal House of States. If the federal government tried to overstep its bounds, the state legislatures, through their appointed senators, could block it. It was a direct line of accountability that kept national interests from trampling local ones. Then came 1913, and the resistance shattered. It began on February 3rd of the ratification of the 16th Amendment, which granted Congress the power to lay and collect taxes on incomes from whatever source derived. Suddenly, the wall between the federal government and the private earnings of the citizen was gone. 2 months later, on April 8th, the 17th Amendment was ratified, ending the era of state-appointed senators. From that moment on, senators would be chosen by popular vote, making them reachable through national campaigns and funding sources that operated far above the state level. The House of States was effectively nationalized, removing the final obstacle to a centralized federal authority. The climax of this reset occurred in the final days of the year. On December 23, 1913, while 27 senators were absent for the Christmas holiday, President Woodrow Wilson signed the Federal Reserve Act into law. The bill had moved with suspicious speed, passing through the House just hours earlier. This act created the Federal Reserve System, a centralized banking framework that gave a small group of private institutions control over the nation's currency. The very thing that had been defeated by Andrew Jackson decades earlier, a central bank, was now the law of the land. In 10 months, the government gained the power to tax the people directly, the Senate was stripped of its state accountability, and the money supply was handed over to a central board. The shift wasn't just legislative, it was visible in the very stones of the country. 1913 was the year Grand Central Terminal opened in New York, a monument to the scale and decorative ambition of the before world. Within 2 years, that style of civic construction, lavish, detailed, and built to last centuries, vanished. It was replaced by the streamlined, simplified logic of the modern era. Contracts stopped coming for the stone carvers and artisans. The money was now flowing into different channels. The generation that lived through this reset noticed the change in ways that textbooks often ignore. In the 1930s, the Federal Writers Project interviewed thousands of elderly Americans who remembered the transition. They didn't speak in terms of policy, they spoke of texture. They remembered when a store kept separate ledgers for different types of currency. They remembered when a Senate election was a local event, held in a state capital, not a multi-million-dollar national media circus. They described the standardization as something that felt like a change of season, a slow vanishing of variety and local autonomy. Their grandchildren, however, were taught a different story. In the schools of the 1940s and 1950s, the events of 1913 were framed as progressive-era reforms. The income tax was presented as a way to fund a modern society, the Federal Reserve as a way to stabilize the economy, and direct Senate elections as a victory for democracy. The textbooks focused on the why of the change, painting it as an inevitable step toward a more rational, efficient government. They did not focus on the how, the speed, the simultaneity, and the massive transfer of power away from local communities toward a central core. Today, we live in the afterworld. We consider a federal income tax a fact of nature. We view a centralized currency as a necessity. We see our senators as national celebrities rather than state representatives. We have been told that 1913 was the year America finally grew up, but the archives tell a different story. The ratification certificates, the congressional record of that nearly empty Senate chamber on December 23rd, and the handwritten memories of the people who were there all point to a different reality. 1913 wasn't just a year of reform, it was the year the old America was quietly archived. The question isn't whether these changes were good or bad in the eyes of history. The question is why everything that had failed to pass for over a century suddenly succeeded at once. The witnesses who lived through it didn't have the answer, but they recorded the shift. They saw the ledgers merge into a single column. They saw the decorative stone give way to flat concrete. They saw the local script vanish. They were the last human chain connecting us to a world where the government was small, the money was local, and the states were sovereign. As that chain closes, all that remains is the data, waiting for anyone willing to read what happened during the year the money was reset.